Welcome to the first ever video of the Portfolio Update series. Every week I will be showcasing my portfolio and share updates regarding the dividends received, the growth of my portfolio, my positions and much more. This first video will be much more in-depth as I will be showcasing the entire portfolio and its details, but the next videos in this series will not be as in-depth, the updates will be much quicker. I have to mention that none of this is financial advice and I am not a financial advisor, please do your own due diligence. This Excel layout is a combination from the YouTubers Dividend Data and Dividend Growth Income, so shout out to both of them for this. I have changed the colors, but I have used the layouts they created to set up this Excel as I am a beginner in investing in stocks and I'm still learning. Let's get into the portfolio now. I've been adding a bit of money through the month of July and currently the cost basis of my portfolio is $308.94, but the value of my portfolio is $357.36. This is because I originally started to invest during the COVID crash, but I only invested $100 and then didn't invest after that, which I wish I did invest and DCA'd over time instead of forgetting about it. So I had some long-term capital gains on that $100, which is why the value is much higher than my cost basis. My portfolio has a beta slightly lower than the overall market at 0.93. I currently have 14 stocks in my portfolio, but I do intend to add to this more and have somewhere around 20 to 25 stocks at most, but for the time being I don't see other companies that I want to add that I like, that have strong fundamentals, and are not near their 52-week highs. There are a ton of companies I wanted to add, but they are very close to their 52-week highs and I just didn't really want to buy them, and I am alright with waiting for a bit, so they are currently on my watchlist for future consideration. My current yearly dividend income is projected to be $7.01, but I expect it to be less as I started to add to this portfolio in July. Here is the breakdown of the yearly dividend income compared to each stock that I own. SCHD is the biggest with a yearly dividend of $2.92 and Costco is the lowest with a yearly dividend of 6 cents. My portfolio is fairly diversified with a larger focus on tech and ETFs. Each sector has no more than 2 with the exception of tech, which has 3 stocks. However, looking at the holding diversification, SCHD and VU are my bigger holdings, making up roughly 50% of my entire portfolio. They should make up 50% as I have them split up 25% and 25% in M1 Finance, but at the moment I haven't invested into VU because I have a cost average just under $400 and I want to keep it under $400 for now. My dividend yield on cost is 2.27%, but the actual yield is 1.96%, which is very, very low, but I went with companies that have higher growth potential as opposed to higher yields, which I will showcase now with my holdings. Let's take a look at my current holdings include AAPL, SCHD, ADP, AVGO, JNJ, LO, MSFT, O, V, VU, JPM, COST, CAT, UNH. The stocks AAPL, JNJ, MSFT, V, and VU were some of the stocks I bought during the COVID crash, but I recently added to these positions during July, those being for JNJ, V and VU, which changed my cost average. However, I have not added to AAPL and MSFT, which is why their purchase price is very low and another reason why I wished I continued to invest when I did. AAPL and MSFT have returned 142% and 78% respectively in that time frame. I had other stocks in my original M1 Finance portfolio, but I decided to sell some of them and use the gains to buy my current and new positions. I know there is some overlap with VU and SCHD with some of the stocks that I own, but I still wanted to include them in my portfolio individually. SCHD is currently my biggest position and I've continued to DCA into it more as opposed to VU, but I started to add to SCHD at around $69 lol. My Broadcom average is pretty high, but if it drops down I'll still continue to DCA into it, which is the same for the rest of my stocks. I use M1 Finance and I deposit weekly and have it automatically invest unless I want to control how the money is divided up. As you can see, the dividend yields for some of the stocks are under 1%, but yield on cost is much higher than the normal yield. This is why I don't mind having a lower yield right now. These are quality companies with great dividend growth rates and lots of room to grow the dividend and grow the company itself, as most of these stocks have low payout ratios. In the long run my dividend yield will hopefully be more attractive with a higher yield on cost, but some of these companies also offer great returns. AAPL, V, and MSFT have low dividend yields but have room to grow those dividends and have grown a lot recently in price, which does help with the lower dividend yield. And I balance those low yields with some stocks like O that offer higher yields. So my portfolio is more focused on the growth side as opposed to the income side of dividend investing, with a mix of stock price appreciation or capital gains returns mixed in there as well. As you can see here, for the month of July I have contributed $200 so far, and in next week's video it will obviously be different. At the top right of this section is my goal for the end of the year. I would like to have a $2,000 contribution goal by the end of the year, and I currently am 10% of the way there, and I have planned out how to contribute on a weekly basis to ensure I meet this goal. I know the rough date for when I would be 50% to my goal, and I will share the plan on how I plan to get to the other 50% when I reach the 1K milestone, but for now I will continue to invest $50 weekly. This is the dividend calendar, and currently I have made just shy of $1, but over time I hope to continue to grow this number, and yes, my dividends are low right now, but eventually they will pay off with DCA and being consistent. Which is what I hope to showcase in these update videos. Here is how my portfolio has performed compared to the SPY, which tracks the S&P 500. My goal isn't really to beat the market, it would be nice if it did, but I just hope my portfolio can give gains similar to that of the S&P 500. On the one day my portfolio had a loss of 0.78%, while SPY lost 0.64%, so my portfolio went down lower than the S&P 500. For the 1 week my portfolio had lost minus 0.4%, while SPY returned 0.71%, which is interesting for me, but I think that MSFT could be playing a role in that drop for my portfolio, as it is the only stock that is down for the 1 month. Which leads to the 1 month return, where my portfolio returned 3.52%, while the market returned 5.58%. MSFT was down 1.14% in that 1 month span. Here you can see the difference between my portfolio and the SPY. I am happy with the 2% difference over the course of the 1 month, as it is fairly close with my 1 or 2% margin that I won with the return from the market with my portfolio. Also, I have noticed in a downturn of the market, my portfolio performs really poorly, but in our upward movement, I've beaten the market on the daily closes, so hopefully I can show those daily returns soon. Also, this video was recorded prior to the market close for the day this video is going up, which is July 28th, so these performances do not factor that in. This concludes my first weekly portfolio update video. If you want to join me on my dividend journey, be sure to subscribe and turn on post notifications. I plan on uploading every Friday. Also like the video, as it does help out with the YouTube algorithm.